In a world rattled by trade wars and rising tariffs, artificial intelligence has quietly helped steady the global economy. According to the International Monetary Fund, massive investments in AI, particularly in the United States, have boosted productivity, lowered costs, and muted the inflationary shock that tariffs were expected to unleash. Asset management company BlackRock sees AI driving markets in 2026 as well, but warns of volatility from speculation and leverage. The OECD earlier this month said global growth is stronger than expected, with an AI boom offsetting US tariff shocks.
However, our outlook highlights key fragilities on the horizon, from elevated trade restrictions to policy uncertainty and concerns about supply chain security, to rising public spending pressures from increased defense requirements and the rising economic and fiscal impacts of population aging and vulnerabilities associated with high financial asset valuations, such as for AI-related investments and cryptocurrencies.
AI is streamlining industries, cutting costs, and shielding firms from tariffs. The IMF says AI spending is cushioning growth and inflation amid trade tensions. Even Estée Lauder is expanding brands to win younger shoppers in an AI-driven market.
But part of DCM philosophy is also to incubate new brands. And today, in the world driven by AI, driven by speed, driven by technology disruption, we can create new brands. And recently, we've created a new bath and body brand called Loofah that we are incubating as we speak and we are launching. So you're going to see us doing external but internal incubation through M&As to be able to continue to grow in the future.
For governments, the message is clear. Investing in artificial intelligence isn't just about innovation. It's about economic survival. And for businesses, it's a reminder that embracing AI early can mean weathering storms and global trade. Artificial intelligence may not end trade wars, but it is proving to be a powerful shield against their economic fallout. The Economic Brief, DD India.
And Shubhamay Bhattacharjee, Director, Center for Regulatory Governance at O.P. Jindal Global University, continues to be with us. Mr. Bhattacharjee, so there are big investments coming into India in terms of AI. We're going to run a story on that as well. But how well positioned is India, currently to take advantage of AI?
Well, let's put it this way. First of all, AI is not something that you can sort of, decide whether or not to be involved in. It is there and it's bound to be there. Fortunately for India, what's happened is that the India government has recognized AI for what it is, that it is the most significant changer of economic conditions in a country. Now, the India AI mission, which outlay of something like 76,000 crore, and that's a very big amount which the India government has decided to put in, is a very major support that the government has already made towards making AI, get involved in AI technology, AI innovation, AI adoption. All of these things will now be rolling out. Now, what's happening is that India has got a huge scientific manpower. India has got a huge technical manpower. The point is that there was always the issue that how much is the financing available to be able to make that use of that AI. Right. So as you can see, in fact, in one of your earlier stories, you talked about Microsoft and Amazon putting in major amount of money, and right. Their money is basically coming into India for AI related work. So yes. Obviously they realize that what the India government is putting in is complementary to what they're doing. So indeed. Yes, we seem to be getting the game right.
Indeed. The IMF believes that AI is going to raise the output per worker significantly. I mean, the tools are there, so a person's output increases, quality of work increases. That's giving the West and countries with aging populations a certain sort of advantage currently. So I mean, it's a development strategy that one has to adopt or look into, because is it AI dividend versus demographic dividend?
Well, actually, it's inseparable. I mean, one would expect that in India, with the huge young population, that should be, and in fact, it's showing a very ready, easily adaptability towards AI. So there we have that advantage. We don't have to tell people. In fact, surveys done earlier this year. I think it was by, not by IMF, but by The Economist magazine, I think, which showed how, what is the adoption, or rather what is the feeling towards AI, what is the attitude towards AI, and that shows India is one of the most right at the top there in terms of people's comfort level with AI. Now, that's a very significant step, because that means the government or any other company doesn't need to persuade people that AI is important. People are involved. And in fact, if you look at the AI downloads, India is right at the top for whatever reasons, but those are significant changes.
We leave it there. Thank you very much, Mr. Shubham Bhattacharjee, Director, Center for Regulatory Governance at OP Jindal Global University. Thank you for helping us unpack those stories.